So people often ask me if they should invest in the market now. So let's look at various reasons why you might want to invest in the market or why you might want to hold off. Now, why by now, I of course mean kind of any time this question comes up in your mind, not necessarily exactly at this moment in time. And this also applies to people who are new investors or people who are looking to invest more money into their investment pool. Now, of course, keep in mind that time is on your side. The earlier you start investing, the better off you will be because of compounding. Now, Warren Buffett here, he started very early and slowly grew his wealth. Now, the compounding effect really kicks in towards the later half of his life, and you can see that he is doing quite well indeed, with nearly $85 billion at the time of this particular publication. Now, in terms of reasons why you might not want to invest, one would be if you don't have an emergency fund. So it turns out roughly 28% of the US population does not have funds set aside for an emergency. So this might be, $1,000 to $2,000 for some eventuality like your furnace going bust. Now, you also might not want to invest if you have high interest rate loans to pay for, like in a credit card, or if you have a short-term goal, you're looking to buy a house, buy a car, uh, pay for college tuition for yourself or an offspring, whatever that might be. These might be reasons to kind of hold off investing because your money is going to be better put to use to accomplish these things. And also you might want to think about diversification. So if you're talking about, just buying a stock or something like that, maybe isn't the best use of your money. You want to be well diversified in terms of, a mutual fund or an ETF, whether that's active or passive. Now, another reason why you might not want to get in right now is the market is currently, pretty highly valued. So we're actually looking at kind of the second highest levels we've ever seen in the market. Some would argue that you should really wait for a correction. Your opportunities will be better off there. So it's worth waiting for this. Now, unfortunately, market timing is notoriously difficult. If you look back at 1997, we also saw very high valuations in the US market, but it continued to run for 2+ years longer. There's certainly risk in not investing by putting that cash on the sidelines because the market can go up. Your financial planner wouldn't say to kind of to sit there and try to time the market. That if you're going to invest for the long run. So just keep those long-term appreciation, long-term wealth creations in front of the short-term timing opportunity. So you're welcome to try that, but that is notoriously difficult to do. In fact, most people that try it end up losing 4% per year over what they would have earned if they had just bought and hold. Now, if you have the time and the money, this is kind of back to reasons why you wouldn't. Most of the reasons are because you don't have the money to put in the market. But if you have the time and the money, then you should invest in the market. I would argue that it's not worth it to try to time the market, given the average failure rate at doing that. And also keep in mind that if you have that money and you don't invest it, then you're actually your other alternatives, which is kind of leave it in your savings account and things like that. There are poor alternatives for someone with the time and the money to do that. You're actually putting yourself at risk by not investing in the market. Now you can see, of course, long run, like I'm saying here, this makes sense. So stocks dramatically outperform either cash investments, gold, commodities, T-bills, bonds, things of that nature. So if you look at the real return here, you can see that the second best option would yield you over the long time period here, less than $2,000. But if you're in stocks, then you're going to see that your real return for this long time horizon is $1 million. So these other alternatives really are poor alternatives if you have that time and if you have that money to let it sit there and kind of forget about it. So again, so go fishing. This is the let it sit there and forget about it. Don't pay too much attention to your investments. Now, I want to put some caution in there. So you do want to periodically monitor your investments. Maybe you want to rebalance kind of annually to your target allocations, things of that nature. But in general, kind of the less you spend looking at it, the better off you're going to be in the long run. So for me, you really should invest if you have the means to do so. I would encourage you to do that at any time and not necessarily worry about market levels because, again, that is notoriously difficult to time. Thanks so much.